Please don't make any financial plans until you've heard this vital update, especially if you're retired or living on a set monthly income. This message is critical for seniors, retirees, and anyone whose budget depends on regular checks from Social Security, SSI, SSDI, the VA, or a pension plan. So if that's you or someone you love, I need you to focus with me for the next few minutes. Lately, there's been a whirlwind of chatter, concern, and conflicting reports. A single question is on the minds of countless older adults across the country. Are new financial relief payments truly starting to go out on January 17th? And if that's the case, who exactly gets one? You'll see some sources presenting it as an absolute certainty, while others leave you feeling totally lost or even frightened. In this discussion, we're going to pause, take a deep breath, and walk through all of it together, point by point. We'll cover what's known for sure, what's still taking shape, and how any of this could impact your finances and your state of mind. For more than a decade, my work has been dedicated to helping Americans over 60 safeguard their savings, decipher complicated money news, and move forward with certainty after retirement. What drives me isn't sensationalism or scare tactics, it's providing understanding. I believe that with clear facts, you're equipped to make smarter choices and sidestep unneeded anxiety. That's the sole reason I'm speaking with you right now. This isn't about grand guarantees or creating a sense of urgency. It's about grasping what the January 17 date actually signifies, what forms of financial assistance are being talked about, and how you can separate factual news from well-circulated fiction. In the last year, I've heard a constant refrain from retirees. No matter how carefully they plan, their monthly income just doesn't cover what it once did. Food is more expensive. Energy bills are climbing. The price of medicine and doctor visits appears to increase annually. When you're on a fixed income, these creeping costs don't just strain your budget, they weigh on your spirit. In response to this very real pressure, there have been louder demands for directed financial aid, particularly for older adults, individuals with disabilities, and those who served our country. This is the essential backdrop to the conversations you might have spotted online or heard from relatives, neighbors, or in community groups. Now let's get specific about why January 17th is popping up everywhere, and why it's crucial to interpret it accurately. January 17 is not a day when money magically appears in every account. Instead, it signals the start of a planned processing window linked to particular aid initiatives and certain benefit revisions. In simpler terms, it's a commencement date, not a blanket deposit day. Some people who meet the criteria might notice payments or changes begin near this time, while others may see updates later in January or in the subsequent weeks. Getting this distinction right is everything, because missing it can lead to letdown or added stress. Here's another gentle but vital point to remember. When folks hear relief payment in early 2026, their minds often flash back to the widespread economic impact payments from the pandemic era. What's on the table now is not the same. Current efforts are more narrowly focused. They are frequently linked to established benefit systems instead of being distributed to all adults nationwide. Often, they aren't even formally labeled stimulus, even though their purpose is to offer direct monetary support. They might arrive as a single assistance deposit, an inflation-related supplement, a state-issued refund, or a federal add-on that integrates with programs like Social Security, SSI, SSDI, or VA benefits. For many seniors, this is actually a comfort. In the majority of situations, if you're already getting federal benefits and your details are current, you won't have to sign up for anything new or tackle complex paperwork. Qualification is usually decided using data the authorities already possess, like your existing benefit enrollment or previous tax returns. This method aims to lower hassle, decrease forms, and shield seniors from fraud. Understanding this helps you stay centered and pay attention only to what's relevant, instead of chasing every alarming headline or piece of gossip. As we go further, we'll examine who might be eligible, what the payments actually look like, and what you can practically anticipate as January progresses. My aim is for you to feel knowledgeable, stable, and assured, not hurried or cornered. By the time we finish, you'll have a sharper view of what January 17th means and how to navigate this period with composure, recognizing that good information is among the most powerful resources you have to guard your economic health. Now that we've laid the groundwork, let's slow our pace and discuss why this date is significant, without fear and without jumping to conclusions. Dates like this one often develop their own mythology on the internet. A single administrative marker can rapidly become sensational news, making it seem like a massive windfall is assured for all. In truth, January 17th is best viewed as an operational kickoff point. It's a moment when certain disbursements, modifications, or aid-related funds start being issued for particular populations. It does not imply that every retiree or beneficiary will get funds that precise day. And it certainly doesn't mean an entirely new national scheme has been secretly authorized. January is perpetually an active month for benefit administrations. Annual recalibrations, updates, and new calculations are handled across federal and state offices. When aid packages are incorporated, especially those responding to increased living expenses, they frequently get timed to these January administrative cycles. That's the reason you may be hearing January 17th cited in official schedules or processing calendars. It's simply when some systems start sending out payments or adjustments for qualified individuals. Some may see a deposit soon after that date. Others might see it later in the month, and some may not see any extra payment at all, based on their specific situation. It's also key to see the bigger picture. Over the last year, the price of daily essentials has kept rising. Seniors with fixed incomes feel this pinch more acutely than almost any other group. When what you have coming in is steady, but what's going out isn't, even minor hikes can shake your feeling of safety. This is the root cause behind the current relief talks. They are a reaction to genuine financial pressure, not a whimsical or out-of-the-blue choice. Agencies and legislators are attempting to meet these needs in a precise manner, concentrating aid where it's most required, rather than sending identical sums to the whole public. This precise method is precisely why hopes must be kept in check. Not every senior will meet the requirements, and not every payment will be identical. Some aid is connected directly to earnings levels. Other times, it hinges on the kind of benefit you get. And in certain instances, programs run by individual states come into play, which means the timing and sum can differ based on where you live. January 17th merely notes the start of one stage in this procedure. Knowing that helps you remain tranquil and avoid the emotional ups and downs that come from expecting too much, too early. Now let's tackle a term that generates immense confusion: the word stimulus itself. Hearing it, people frequently imagine a sizable check arriving on its own just like years ago. But the landscape in 2026 is distinct. Nowadays, the term is commonly used casually to refer to a spectrum of support efforts. Even when those funds are officially named something different, the objective remains: to give short-term financial help, but the framework has evolved. Instead of sweeping, identical checks, present-day support is more selective. It's structured to assist people hit hardest by climbing prices, particularly seniors, individuals with disabilities, and veterans getting by on limited means. These funds can appear in several ways. Some are single assistance deposits meant to address pressing costs. Others are inflation supplements that pair with current benefits. Occasionally, states manage their own refunds or credits using federal money, which is why not everybody gets the same thing simultaneously. For older adults, one of the most comforting aspects of this approach is how eligibility is managed. In most scenarios, if you already get Social Security, SSI, SSDI, or VA payments, you won't need to file a separate claim for this extra support. Qualification is typically determined via details the government already has in its records, like your benefit standing or your income history. This is by design. It cuts down on forms, lessens bewilderment, and helps guard older Americans from swindles that inevitably emerge when new initiatives are unveiled. I realize many seniors fear missing a cutoff or making an error on a form. That worry is perfectly reasonable. But here, the process is built to operate seamlessly behind the scenes for those who are eligible. Provided your information is correct, payments are generally handled automatically. This doesn't guarantee everyone will get something, but it does mean you shouldn't feel rushed or respond to anyone insisting you must act fast to claim money. The core lesson from this segment is perspective. January 17 is a beginning, not a pledge. Financial relief in 2026 is targeted, not for all, and the procedure is intended to be smooth and automatic, not tense or complex. When you grasp these principles, it becomes far simpler to ignore sensational reports and concentrate solely on news that genuinely pertains to you. As we proceed, we'll examine more closely who could qualify and what seniors should practically expect, so you can stay updated, steady, and command of your monetary choices. Let's now speak more concretely about who might actually see funds starting around January 17th, because this is where knowing the specifics truly counts. Not each person will be impacted identically, and that's all right. These support measures are crafted to reach defined groups according to need, benefit category, and income, rather than being dispersed uniformly to everybody. Understanding your likely position helps you maintain practical expectations and dodge needless concern. For seniors collecting Social Security retirement, remember that your normal monthly payment timetable remains unchanged. Those funds will still come based on your birth date, exactly as always. However, some retirees might notice an extra deposit or tweak related to support efforts that are coordinated with federal or state initiatives. These additional payments aren't assured for all and are often linked to income limits or inflation support programs. Because many of these adjustments are processed in mid-January, that's why the January 17th time frame is so frequently referenced. If you get Supplemental Security Income, or SSI, January is always a significant month. SSI payments are usually sent right at the start of the month, but when special aid or extra help is authorized, those funds are often issued separately from your regular payment. Some SSI recipients might see added support connected to inflation relief or emergency aid programs show up after the month's midpoint. These funds are meant to help with fundamentals like food, housing, utilities, and health care, especially for those with very low income and minimal assets. Social Security disability insurance recipients are also included in these discussions. SSDI beneficiaries generally follow the same payment calendar as Social Security retirees based on their date of birth. If you receive SSDI and satisfy certain income or eligibility rules, you might qualify for additional relief payments processed around or soon after your standard benefit. Since SSDI benefits are set amounts and many recipients face rising expenses, just like retirees, relief programs often include this group when directing assistance. Veterans obtaining VA benefits are another key group to note. VA payments operate on a different schedule than Social Security, but there is coordination when relief programs get the green light at the federal or state level. Some veterans, particularly older ones, those with disabilities or surviving spouses, might notice extra payments or credits reflected in January. The timing might not match Social Security deposits exactly, but January is a common processing window for these initiatives as well. Here's the vital part to hold on to. January 17th does not mean each senior gets money that day. It denotes the start of a phased distribution for certain qualified groups, with payments continuing over the following days and weeks. Some may see something, others may not, and the amounts can differ greatly. Accepting this helps avert disappointment and lets you focus on what actually relates to your circumstances. Now, one of the most frequent and sensible questions seniors pose is whether they must do anything to get these payments. Most of the time, the answer is no. If you already get benefits through Social Security, SSI, SSDI, or the VA, and your details are up to date, relief payments are typically issued automatically. This means no separate application, no call to place, and no extra form to complete. This system is engineered to reduce strain and, just as importantly, to protect seniors from deceptive schemes. Government offices know that older adults are often singled out during periods like this when people are awaiting funds. That's why legitimate relief payments won't ask you to give private details over the phone, by text, or email. No genuine government rep will request your Social Security number, bank account info, or a fee to release money. If anyone contacts you saying they can accelerate your payment or assure eligibility, treat that as a major warning sign. The one proactive step you can take to prevent holdups is to ensure your payment information is current. If you've switched banks, shut an account, or recently moved from paper checks to direct deposit, it's critical that your benefit files show that. Outdated information can cause pauses or returned payments, which only adds aggravation. Keeping your records fresh helps guarantee any payment you're entitled to reaches you without a hitch. The main message here is peace of mind. You don't need to hunt for these payments or reply to high-pressure messages. If you're eligible, the mechanism is built to work quietly in the background. By staying patient, keeping your information correct, and ignoring anyone who pushes for quick action, you shield both your finances and your emotional well-being. Now let's address two worries I hear from seniors more than almost anything else. The first is whether these payments could influence your existing benefits. The second is whether they might lead to tax troubles down the line. These are completely valid concerns, and you're smart to be careful. After years of meticulous budgeting, nobody wants a small amount of aid today to trigger a larger problem tomorrow. The encouraging news is that most relief programs are specifically crafted to prevent that scenario. For seniors receiving Social Security retirement, one-time relief payments or cost of living support generally don't count as earned income. That means they typically won't shrink your regular monthly Social Security amount. These payments are intended to assist with increasing costs, not to penalize you for receiving help. In past aid programs, this rule has been consistently applied, and present directions continue along the same path. While each initiative has its own regulations, the overarching goal is to deliver support without disturbing the benefits you depend on. For those getting Supplemental Security Income, or SSI, the rules can seem more intricate, and that's understandable. SSI is needs-based, so recipients naturally worry about anything that could affect their qualification. In many relief efforts, one-time payments are not included in income calculations for a specific length of time. This exclusion period is deliberate. It allows recipients time to use the money for necessities without instantly threatening a benefit reduction. While it's always prudent to keep a record of any extra payments you receive, these programs are generally framed to protect SSI recipients, not to generate new difficulties. SSDI recipients often sit in a middle ground. Because SSDI is based on work history but still provides a fixed income, relief payments are usually handled similarly to Social Security retirement. In most cases, they aren't considered earned income and won't lower your regular monthly amount. Again, the purpose is assistance, not complication. If you've been managing carefully on a set benefit, these initiatives are meant to support you, not make your life harder. Taxes are another area that sparks significant anxiety, especially for seniors who might already be dealing with limited resources or assistance to file returns. Historically, stimulus-style relief payments haven't been treated as taxable income at the federal level. That means they aren't added to your taxable earnings and don't raise your tax liability. Current relief guidance follows that same general precedent. Even so, I always advise seniors to maintain simple records of any additional payments they get. Having clear documentation offers reassurance and simplifies things if you ever need to ask a question or review your finances later. Now, let's discuss expectations around potential amounts, because this is another spot where clarity is key. These payments are not designed to replace monthly income or solve long-standing financial challenges. They are temporary support measures. Sums can vary widely depending on the program, your income, your benefit type, and sometimes your state. Some seniors might get several $100s, while others may see smaller supplemental figures. It's important not to compare your situation too closely to another person's. Relief programs are often precisely targeted, and two people in different states or on different benefits could have very different experiences. State-run programs in particular can lead to different timing and different sums. This is one reason you might hear one person mention receiving a payment while another hasn't. It doesn't necessarily indicate an error. It simply mirrors how these programs are structured. Even modest amounts can make a real difference when used wisely. For many seniors, a few $100s can cover a month's groceries, pay a utility bill, refill prescriptions, or ease stress by addressing a lingering bill. Viewed through this lens, relief payments are about creating stability, not transformation. They offer a bit of breathing room, not a permanent fix. The most crucial thing is to keep expectations realistic and grounded. These funds are meant to help you navigate a tough period, not to overhaul your financial life overnight. When you comprehend their intent and limits, you're less prone to feel let down, and more likely to use the support in a manner that genuinely benefits you. And that understanding, more than anything, helps you stay calm, confident, and in control as January unfolds. As the month moves forward, one of the most practical steps you can take is simply to stay aware of how payments might appear and how information is shared. If you get benefits by direct deposit, it's sensible to monitor your bank account periodically, especially after mid-January. Relief payments don't always look identical to your regular Social Security or SSI deposit. Sometimes they show up with a different descriptor or name, which can be puzzling if you're not prepared. Taking a moment to calmly review your account can help you identify legitimate deposits without alarm. If you receive paper checks, patience is especially vital. Mail delivery can be slower in winter, and weather delays are common in many regions. A payment that's been issued might take additional time to land in your mailbox. This doesn't mean it's lost or canceled. It just reflects the reality of physical mail. During this time, try to avoid assuming the worst if something doesn't arrive immediately. Systems distribute payments over a period, not all at once. Keeping basic records can also be useful. You don't need anything elaborate. A simple note of when a payment arrived, the amount, and how it was described is often sufficient. This can give you reassurance and make it easier to answer questions later if you ever need clarification. It also helps you feel more in command, which is particularly valuable when financial updates feel constant. Simultaneously, this is when misleading headlines tend to multiply. You may see articles or videos claiming everyone is guaranteed a check or promising huge sums without explaining eligibility. These messages are crafted to capture clicks, not to educate. Trustworthy information tends to sound more balanced, detailed, and measured. If something feels frantic or overly dramatic, that's usually a cue to stop and seek verification before reacting. Sadly, this period also sees a rise in scams, and this is something I want you to be particularly watchful for. Con artists know seniors are anticipating possible payments and may be monitoring accounts closely. They exploit that anticipation. You might get phone calls, texts, emails, or even physical letters pretending to be from a government agency. They may state there's an issue with your payment, or that you need to act fast to receive your funds. These communications are designed to instill fear and immediacy. Please remember this clearly. Legitimate government agencies do not call, text, or email you asking for your Social Security number, bank details, or a payment to unlock funds. They won't ask for gift cards, wire transfers, or any kind of fee. If someone claims they can expedite your payment or guarantee eligibility, that is a fraud. The safest route is to depend only on official communications you normally receive and to disregard unsolicited requests for personal data. Protecting yourself also means trusting your gut. If something feels wrong, it likely is. It's always better to pause, breathe, and double-check information via trusted channels rather than reacting under pressure. Scammers count on urgency and confusion. Calm vigilance is your best protection. By staying alert, watching your accounts patiently, and refusing to interact with anyone who pressures you for information, you safeguard not just your money, but your peace of mind. These relief programs are supposed to support you, not create dread. When you approach this time with steady awareness and confidence, you put yourself in the optimal position to benefit from any support you're entitled to, while staying safe from those looking to exploit the situation. Now let's take a moment to discuss how seniors often decide to use this kind of relief, because this aspect is just as important as understanding when or how a payment comes. There's no single correct way to use additional money, and there is absolutely no judgment here. Every home is unique, and every situation is personal. What matters most is using the support in a way that helps you feel more stable and secure. Many seniors tell me their first thought is to catch up on essentials. Groceries, utility bills, and prescription medications frequently top the list. For someone on a fixed income, knowing these basics are handled for a little while can relieve an enormous weight. Others may use the funds to pay down a past due bill or address a small but persistent expense they've deferred, like a car fix or a necessary household repair. Taking care of those lingering items can deliver real peace. Some seniors opt to put aside a portion as a mini emergency buffer. Even a modest sum can help when an unexpected cost arises. Knowing you have something reserved, even if it's not a large amount, can improve your sleep at night. And for some, simply having a bit of wiggle room in the budget lets them plan more calmly for the coming weeks instead of constantly fretting about the next invoice. What's key to remember is that these payments are meant to bolster your stability, not force you into any specific decision. They aren't about spending rapidly or making large changes. They are about easing pressure, even if just temporarily, and helping you regain a sense of control during a time when costs keep climbing. When used thoughtfully, even a small amount of assistance can have a meaningful emotional effect, lowering anxiety and restoring a feeling of balance. As we wrap up, I want to bring everything back to what truly counts. Payments beginning around January 17th are real for certain eligible seniors, but they are targeted, not for everyone. If you receive Social Security, SSI, SSDI, or VA benefits, and your information is current, you might qualify without needing to do a thing. These initiatives are designed to provide relief, not confusion. Understanding how they operate helps you avoid unneeded stress and protects you from false information and fraud. If this explanation helped you feel more informed or a bit more assured about what's coming, I'm genuinely glad. That's always my objective, to help you feel steady and empowered regarding your finances. If you found this useful, please consider liking this video and mentioning my channel, to others who might benefit. It helps more seniors locate clear, trustworthy guidance. And I'd love to hear your thoughts. What's one financial insight you wish you'd learned earlier in life? Sharing your story in the comments could help someone else feel less isolated and a little more ready for the journey ahead.